There's all kind of chaos and uncertainty across global markets, but Bitcoin's price has been grinding up higher and higher. So let's take a look at what's been going on this past week. First, if we look at the Bitcoin market, you can see that we're trading around $46,500. That's outperforming most other assets over the past week. If we then take a look at the Bitcoin network itself, what we can see is that the Bitcoin market cap is just under $900 billion. Now about 90% of the supply has been issued, and the 19th million Bitcoin has now officially been put into circulation. The real exchange volume is $1.98 billion, and miners were paid $42.5 million over the last 24 hours to continue to secure Bitcoin, the most secure computing network in the world. Bitcoin is also trading at 40% up from the cycle low. But Bitcoin has only ever been 210 days higher than the current price point. So for over 95% of Bitcoin's life, it was at a lower price point. This is important because if you continue to dollar cost average, you're probably in a pretty good position. If we then take a look at the compound annual growth rate, what we can see is that Bitcoin's 10-year compound annual growth rate is 150%. That is destroying anything, including the S&P, which is only 12.4%, or the NASDAQ at 16.6%. Bitcoin continues to compound at an incredible pace, and it doesn't have any signs of slowing down anytime soon. Now, if we take a look at on-chain metrics, we'll go to Will Clemente and the Blockware team. They put together some great charts this week. On it, first, we see the short-term holder realized price. We're just above it. But according to Will, we're going to have to see another day or two of closing above this level. That short-term holder realized price, it's important to trade above it. We're there now, but let's see if it holds. Then if we go ahead and we take a look at the next chart, what we can see is that the Luna Bitcoin holdings, now as a reminder, Luna has the UST, which is a stablecoin. They're backing it with Bitcoin. And you can see here in this green line that they continue to stack more and more Bitcoin. They have $3 billion in reserves they're going to convert into Bitcoin with a goal of eventually reaching $10 billion in Bitcoin. Anytime that you have a persistent buyer in the billions of dollars coming into the market, of course, the price is going to be positively impacted. And what you can see is pretty much as soon as they started to buy, that price started to skyrocket upwards. If we then take a look at the Bitcoin balance on exchanges, what we can see is this green line falling off a cliff since early March. That shows that people who had Bitcoin on exchanges, who had recently bought it, they actually are moving it now, taking it off that exchange into self-custody or cold storage. That's a great sign for Bitcoin bulls because what it means is that there's less Bitcoin on the exchange that simply in a couple of clicks could be sold into the market. Less sell pressure on the market obviously means that the price is likely to be bullish. If we then go ahead and we take a look at the OTC desk holdings as well, we can see that they have fallen off a cliff as well. This is just another signal showing that there is low sell pressure, meaning that the bulls are in control, the price continues to grind upwards, and every single data point we have shows that it's likely to continue. And then last but not least, if we take a look at that illiquid supply shock ratio, we can see that that is ticked up aggressively in the last week. That green line climbing towards the moon. What this tells us is that more and more and more people are holding Bitcoin. They're not willing to sell it. Over 70% of Bitcoin has not been sold in the last year that's in circulation. That's a big deal because when you have a persistent buyer like Luna or even MicroStrategy with their brand new $205 million loan that they took from Silvergate against their Bitcoin collateral, that's hundreds of millions or billions of dollars pouring into a market that's highly illiquid. That usually spells for a bullish outlook. Then lastly, if we shift to the macro environment, we can see Dylan LeClaire pointing out that officially the 10 and 2-year yield curves have officially inverted. Once you get this inversion historically, it signals that there is a recession that is looming. Now that recession doesn't usually happen right away. It can take anywhere from 6 to 18 months to actually go ahead and play out. In some cases, it happens on the shorter end. On other cases, it happens over a longer period of time. But anytime you get a yield curve inversion, you have to start asking yourself, where's the recession going to come from? When is it going to happen? Ultimately, this yield curve inversion tells us one thing. People are going to be seeking safety. And regardless of whether Wall Street treats Bitcoin as a risk asset or not, the everyday average person, they treat Bitcoin as their reserve asset. They continue to dollar cost average. We have an illiquid market. There's plenty of persistent buyers. The price is grinding up. And even with a recession potentially looming 6 to 18 months away, Bitcoin looks not only healthy, but it looks like we're poised for a move higher. I hope that you enjoy these breakdowns every single week. Next week, I'll be back with Will Clemente from Blockware. If you don't, go follow him on Twitter, go follow Dylan, and we'll be back next Saturday.